Over the weekend, Goldman Sachs released a report on silver that closely mirrors what they wrote about gold back in 2024. And that matters a lot because when Goldman wrote that report on gold, they made a very specific claim. They said gold's beta was resetting higher and that traditional correlations were temporarily suspended. At the time, that language validated what many of us had already observed throughout 2023 and 2024. Gold was no longer trading inside the old macro framework. Now, Goldman is applying that exact same framework to silver, and that tells us something critical. The old neoclassical or Keynesian correlation structure is no longer holding. Interest rates, the dollar, equities, those relationships are breaking down. Gold already went through this reset. Silver is now entering it. Business as usual is no longer operating under the old assumptions. Structural change is now expressing itself in silver in the same way it previously did in gold. This is not a short-term trade thesis. This is a regime change, and once a monetary metal goes through a beta reset, it is never viewed the same way again. Let's talk about what's happening in markets right now. US Treasury yields are moving higher. The dollar is weakening. Equities are under pressure. Gold is making new all-time highs. Again, silver is trading above $84, up over $4 on the day, and above its prior all-time high. Copper is up. Platinum is surging. Palladium is moving. This is not random. This is the market responding to credibility risk. One of the most important developments, and one that cannot be ignored, is the Department of Justice opening a criminal probe into Federal Reserve Chair Jerome Powell. Whether the case has merit or not is beside the point. The signal has already been sent. The market is now pricing in the idea that the rule of law itself is flexible. And when that perception spreads globally, capital does exactly what it's doing now. It leaves paper promises and moves into real assets. Silver's move is not just emotional, it's technical. Breaking above the prior all-time high puts silver on a measured move path toward the 90s, with 100 as a very clear signpost. That does not mean it stops there. It means that silver is now operating in price discovery, and price discovery phases tend to move faster than people expect. But here's where most people miss the real opportunity. The real story is not silver alone, it's what happens next. Let's talk about the SILJ to silver ratio. This ratio measures how junior silver miners are valued relative to silver itself. And right now, that ratio is at an all-time low. Historically, this only happens near major inflection points. Whenever silver enters a sustained bull phase, junior miners rise more than silver. Not slightly more, significantly more. Why? Because miners have operating leverage. Silver prices rise, but mining costs do not rise at the same rate. Margins expand exponentially. That's why SILJ has always outperformed silver during silver bull markets. And this time, that leverage is starting from historically depressed levels. The bigger picture is clear. The paper framework is ending. Resource security is replacing ideological globalization. And capital is repositioning accordingly. This is why metals are behaving differently. This is why correlations are breaking. And this is why the beta reset matters. This is not about chasing price. It's about understanding where the market structure is changing and positioning ahead of that change. Silver has confirmed the breakout. The miners have not yet fully responded. That gap does not last forever. If you want to understand how wealth is built during regime shifts like this, you're in the right place. This is smart wealth code, and this cycle is just getting started.